Most people think investing is about picking winners. They think it's about luck, timing, or following the right Twitter account. They're wrong. Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. Wealth isn't picket, it's built on the law of economic physics. Why does one asset quietly compound for decades, turning thousands into millions, while another, backed by hype and potential, collapses to zero? Why do some things accrue value while others merely leak it? If you don't know the answer, you're not an investor. You're a gambler waiting for a miracle. Today we're stripping away the noise. Look at the 5 pillars of assets or evolutions. By the end of this video, you won't just see prices, you'll see engine under the hood. Now let's talk about the difference between a thing and an asset. Pillar 1. Cash flow. Cash flow is the most honest metric in the world. Think of a stock, a rental property, or a private business. Why are they valued? Because they produce a yield. There are machines that print more money than they consume. In the TradingBits X framework, we call this the gravity of value. When markets panic and narratives die, the only thing left standing is the cash flow. Pause the video right now. Look at your portfolio. How many of your assets would you still want to own if the stock market closes for the next 5 years? Tell me in the comments below. Are you hunting for yield or are you hunting for exit liquidity? If an asset doesn't generate income, you're relying on the greater fool theory. The hope that someone else will pay more than you did. That's not strategic, that's a prayer. Scarcity, the supply constraints. We'll all heard it, buy land. They aren't making any more of it. But the scarcity is a double-edged sword. There are millions of unique digital images, NFT, or rare rocks that are technically scarce, but their value is just zero. The scarcity only matters when it meets persistent demand. When we look at the asset like Bitcoin or gold, we aren't just looking at the limited supply, we're looking at the cost of production. If you can't easily print more of it to meet its demand, the price has no choice but to go vertical. Ask yourself, is the asset you're holding truly scarce, or can a CEO, a central bank, or a developer press a button and dilute it into oblivion? Utility, the friction killer. Why do people use Ethereum? Because they do something. They solve a problem. They reduce friction in the system. Utility is the floor of an asset's value. It's the reason people need to assess, not just want it. Low utility, a quality that sits on a shelf. High utility, an oil contractor that powers a city of a software, or a software that automates a $1 billion supply chain. If the world stopped speculating tomorrow, does your asset still have a job to do? If the answer is no, you're holding a bubble. Productivity, the scalability factor. This is where 1% separate themselves from the 99%. A gold bar is scarce, but it's not productivity. It doesn't grow, it just sits there. A farmer, however, is productivity. It uses sunlight and labors to create more value. The best assets are self-compounding. They use their own success to fuel more growth. Think of Amazon, using steel retail products to build AWS. That is a productivity loop. Question for you. What is the most productive asset you ever owned? Was it a stock, was it a business, or was it your own education? I want to see your answers below. Narrative, the social consensus. Now we enter the ghost in the machine. Narrative is the story we tell ourselves about why something matters. It's the most powerful force in the short term. Narrative can take a backrock movie theater company or a meme coin and send it into the moon. But narrative is volatile. It is a sheriff myth. In the TradingBits X style, we view narratives as leverage. It multiplies the effects on the other 4 pillars. But if the narrative outpaces the cash flow and the utility, the crash isn't a possibility, it's a mathematical certainty. Are you buying the reality or are you just buying the ghost? Why assets die, the decay log. So why do some assets stay flat? Because they're leaky bucket. They have high inflation, scarcity failure. They're being replaced by better tech, utility failure. They're mismanagement, productivity failure. If an asset isn't growing, it's usually because it's fighting against one of these fundamentals law. You cannot hike your way out of bad physics forever. Understanding why an asset should grow is only the half of the battle. The other half is knowing when to buy. Because here's the kicker, you can't find a perfect axis with cash flow, scarcity, and utility, and you still lose money if you pay the wrong price. The price is what you pay, value is what you get. In our next video, we're gonna go deep into the mechanism of the markets. If you find this breakdown valuable, share this video. The more people who understand this system, the less power the manipulator have. Which is the 5 pillars: cash flow, scarcity, utility, productivity, or narrative do you think is the master pillar? Let me know in the comments below. If you enjoyed this content, please consider to subscribe and hit that like button. We're trying to build a community to decode the economy from the ground. And remember, money, markets, we're trading the future. See you in the next one.